In this video, I'm going to share with you the steps of how you can get started investing in real estate. That means we're going to go through how you can find an agent, to finding a lender, to learning how to analyze a deal, and then ultimately finding the motivation to pull the trigger and make an offer on that deal. So, real estate has changed my life in a lot of ways, and I want to share that with you. So, let's get into it. When you get started, it can be very difficult because especially if you don't have anybody in your family that is in real estate to kind of give you or show you the ropes, it can be very difficult to be off and on your own. And so the first thing in order to get started is you have to find an agent. Now, my biggest advice that I can give to you is finding an agent that invests themselves, meaning that they already are implementing strategies in your area or have figured out kind of what works. And hopefully they have a few properties so that you can feel a little bit more confident going into a deal working with them. But ultimately, in order to find an agent, the way that I had done it is I went through BiggerPockets Forum to try and find somebody in my area that was an investor, right? And so that was my whole thing, was that I wanted to make sure that I found other like-minded people who could help me reach my goals. And I think you should too. You should leverage the people in your network. You should leverage the people that you read about in these BiggerPockets forums to kind of figure out how you can best go about the strategies in your areas. And so tip number one, finding your real estate agent through there and make sure that they're an investor. And what the value that they'll bring to you is really that they're going to know how to calculate a deal, analyze the deal, make sure that the numbers work, or else they won't be showing them to you, right? And so once you give them kind of your criteria or the things that you're kind of looking for, they'll be there to help you out. And you can also tell them your concerns, you can tell them everything that you're thinking about, and I'm sure that they will be there as a fantastic resource to help you kind of through your journey, to help you kind of figure out what it is that's going to best help push you forward and find success in real estate investing. Now, tip number two is to find a lender. So anytime you try to invest in real estate, you're going to probably have some form of financing unless you're buying the deal out in cash, which for most people is unlikely, especially if you're looking to just get started. You probably won't take that approach. So finding a lender is going to be huge. And just like tip number one, you're going to need to find an agent, and that agent who invests already probably already has a lender that they really like, right? And so they're going to refer you to them. And of course, you should always do your due diligence. You should always make sure, like, is this lender doing what I need them to do? Can I find something with better rates, etc., etc. So make sure that you're always looking out for yourself, but it is always a pro tip to leverage the people in your network, allow yourself to see these referrals and move forward. And additionally, if your lender is also an investor, they can help you figure out what will best help your financial situation. They can help put whatever loan it is. Maybe the FHA isn't the best loan for you. Maybe a conventional loan is best for you based on a variety of different reasons, or maybe it's your own personal situation, right? And so everybody's a little bit different. Some people have more money, some people have less money. Whatever that really is, it really will affect your investing strategy. And so it's best to be with somebody that's like-minded, because if they're already making these investments, they already have it in their mind of, okay, this is what I think they're trying to go for, right? Versus somebody who normally just finances, say, just residential homes that for non-investors, then it's kind of like maybe the interests or what you're going for is a little bit different. So it's definitely something to consider by looking for your lender to also be an investor. And that's been the case for me. Both my agent and my lender have both been investors in the past. I hope that the same thing can be done for you, and that you'll be able to find a lot of success by leveraging just these two aspects, the agent and the lender, in your real estate investing. Once you have both your agent and your lender, you're pretty much ready to go, because your lender is going to give you a pre-approval, and then you'll start looking at properties. Now, what kind of investment property should you be looking for? And that is going to be entirely based upon your market. And so, just like, I know everybody hates to say it, but the answer is it depends. And so in these answers, a lot of these can be answered simply by the agent that you're working with and the lender if they're an investor as well. And so what I mean by that is, what we had done back in Minnesota was we were looking for duplexes, because the market was right for them. We could get traditional rents that would pay for the mortgage and other expenses that we would have. And so ultimately that would work there. And so you could both have an appreciating asset or with equity pay down as well as cash flow. Now here in Denver, the strategy is a little bit different because it's more about equity pay down and appreciation. Whereas if you're looking for cash flow, it might be a little bit more difficult to do, but it doesn't make it impossible. And there's a lot of different strategies to go there. And so here they actually do rent by the room. And that is how they're able to get cash flowing properties with equity pay down. And you never count on it, but appreciation is always the nice bonus on top if it happens. And so from there, you just kind of have to understand whatever market it is that you're working in and trying to make money in or invest in, and kind of go from there and take these little baby steps. Some great resources you can also use in order to understand market rate comps is using Rentometer. So if you're doing the traditional method, and really it will just help you to get an idea of rents in your area, but what Rentometer does is it pulls in the properties for rent in your local area and they compare them. And so for instance, if you have a 3-bedroom 2-bath, you can put in the address of your property, and from there it'll give you other 3-bedroom 2-baths in that area for these prices, and then you can even look into them, see if your property is maybe a little bit better, a little bit worse, whatever that might be. And then from there you can also look at, if your strategy is Airbnb, whether it's short-term rentals or long-term or whatever that case may be, you can look on Airbnb, start researching the competition, see what they offer, look at their pictures. There's so much research that you can actually do to understand what the value of a place might be so that you can accurately input them when you're analyzing your deal, because that's going to really matter and it's going to affect your numbers. Overall, what you're going to want to make sure when you're analyzing these deals is that your rent minus all the expenses being the mortgage, utilities, really anything else that you decide to do, and that's based on your strategy, because with Airbnb you provide a little bit more service, so your expenses could be a little bit higher, but overall you want to make sure that it's your rent minus your expenses minus any reserves that you want to put in place for anything that might be a capital expenditure, in order to make sure that your deal cash flows. And at the end of that, that's your cash flow, right? Whatever is left. And so make sure that it's a healthy number for you, whatever that may be, but ultimately that it's in the positive and not in the negative. So let's go through an example. Just a quick and dirty example here. So imagine that you're buying a property, say it's in Minnesota, and ultimately you know that you can get rents of $2,500 for that property. All right, awesome. Now you know that the mortgage, after talking to your lender, is going to be about $1,800 a month. All right, so. And then you also have expenses that are going to be about, $200 a month. Maybe it's utilities, maybe a couple other things. And then you also have your reserves for capital expenditures. So say that's $300. So now you're at between $200 and $300 cash flow. That's not so bad, and that money is going to pay you forever. And on top of that, you can also expect rent to increase every year. About 3% is what people say, but it really depends on your area. So take that into account when you invest, because it's not about the short term, it's about the long term. So make sure that you're thinking about that when you're making these investments. Do you know what else is going to help you become a better investor? If you like and subscribe to this channel, leave a comment, let me know what you're about, what's going on in your life, and how I can help. Now, the last thing we're going to need to talk about is pulling the trigger, because it's probably the hardest step in all of these steps to actually do, because I know that you're going to be willing to get an agent, I know that you're willing to get a lender, and I know that you're willing to figure out and read all the books that you need to do in order to feel like you're good at calculating and analyzing a deal. But the truth of it all is that you're never gonna feel good enough. All right, now I would highly suggest that you talk to your other investors in your network, or maybe your agent that invests, and you show them your deal and your numbers, and you talk through any concerns that you have with them. But if it ultimately comes out that you're going to cash flow, that you're going to have equity, my question to you is, what are you waiting for? The hardest part is pulling the trigger, and so many people don't do it. They'll fall into this analysis paralysis where they'll keep reading books, they'll have all the knowledge in the world, they'll become absolute experts in the field, and they'll never get to a point where they're satisfied with actually pulling the trigger and buying that piece of real estate. So that's it for today, guys. Please leave a like and subscribe to this channel, and leave a comment. Let me know what your thoughts are on investing. Let me know where you're coming from, what your perspective is on all this. So appreciate it, and until next time, peace.